Hi, this is Roger Conrad. I'm editor of Utility Forecaster. What I want to talk about today are third quarter earnings and what they mean for our holdings as well as for the general economy and the general state of things. Basically, we have most of the numbers in right now, and the good news is the companies that we've been recommending have really hung in there very well. Dividends are very well covered. Credit ratings are looking pretty solid. And more importantly, there are some pretty good signs going forward as well, particularly in the electric space, where we've seen a pickup in industrial sales for some of our picks. I think this is a really big plus going forward. Obviously, industrial sales have really dropped off over the past year. It's been one of the major factors in this recession that we're still going through in many parts of the economy. The uptick of industrial sales from the third quarter, or in the third quarter from the second quarter, is a pretty good sign that at least this part of the slowdown has subsided, and that conditions are stabilizing and companies can look forward to rising revenue from that area. Industrial sales have been very, very important for setting wholesale power prices, so that's of course a very major factor for profits for companies that produce to that sector of the market. One of the companies that I wanted to call your attention to is Duke Energy, which we featured in the November Growth Spotlight. And they've reported, again, a very strong uptick in industrial sales in their Carolinas area, about 13% from the third quarter over the second quarter, and a little bit less than that for the Midwest. One real big advantage that they have, this is the fact that they are a low-cost producer. They have been tacking into the new century in terms of what sort of energies they can use, in terms of what sort of financial power they need, what they need to do to continue to serve their customers. They're also highly advantaged in the fact that their Carolina service area is one of those areas in the country where actually global investment is coming in manufacturing and in industry. So they're in a very good place as far as that goes. They received about $200 million in federal stimulus spending for smart grid, and that's of course another huge plus for them. So in any case, if you want to check that out in the current issue, it's still very much a buy, even though it's come up a little bit from there. Other than that, I think looking down the portfolio, those same trends have been pretty much holding. Very good sequential improvements from the second quarter in the third quarter, and that's a very good sign that the fourth quarter will be better still, and that we can look forward in 2010 of even further improvement in results. The sector itself, whether you're talking about power companies or gas companies or water companies or telephone companies, they're still very far down from where they were a year ago. We've had a nice recovery since March, of course, but we're nowhere near the valuation levels we were last year. That's a very big plus, and particularly with their operations improving going forward, I think it means that we can look forward to further gains in our stocks, as well as, again, improved dividend safety as business conditions continue to improve. So that's all I have to say today. I look forward to chatting with you next time.